Welcome to TheoTrade. This is Don Kaufman. Here we are. It is May 16th, 2016. There's about 15 minutes to go to the close on this Monday trading session with the S&Ps up 20 handles. That is 20 points over here. Just about a 1% move to the upside. NASDAQ also strong, along with the Russell kind of leading the pack there, up about 1.37%. Now, over the weekend update, I had discussed a number of sectors seeing both strength and weakness. Specifically, I was pointing out things like, well, here's the transports, right? So go ahead and close up the left side over here, taking a look at the transports. And again, some of the recent trade. I furthered this by going in and actually setting up show price as percentage. And with showing price as percentage, we are looking at some of the most recent declines. And again, trying to identify what strength and what weakness was actually out there in given sectors. Here, specifically in the transports, we identified we're down just about 8% for some of the recent highs. Then I, went a little bit deeper over here. We looked at a couple of different sectors over there. The XLE kind of follows suit with some of the transports. XLE seeing a decline of about 7%, getting a little bit bid up though today. And again, this is, a 7% decline from just recent highs over here. Then I went into things like emerging markets. So again, just a little bit of a identification of what sectors were weak over here. And one of the areas specifically that kind of struck me in this particular case was it wasn't the emerging markets. It wasn't so much that the transports were down. We looked actually at retail. So if you're familiar with retailers out there, again, instead of EEM, which is emerging markets, we looked at XRT, which is of course you've heard retail has been beaten up lately, down about 11% over here. And again, even though it's popping up, albeit very, very slightly today, still getting pummeled in some of the recent trade. But one of the areas that really, again, struck me as, well, not participating to the downside had to do with the XLF, and that was the financials. So to bring up the financials again, in comparison to some of the other major sectors, some of the major, indices out there, the financials holding up extremely well, only seeing from some of the recent highs about a 3% decline. However, I didn't think that the XLF was, well, it's not exactly the prime product to want to trade. It's a $23 product. Okay, there's some issues, lower volatility. So what I did is I started digging into, again, specific financials that really comprise the XLF. Now you got to think of what underlyings actually build the XLF, and that's data that's out there that you can look at, and it's some of your big financial stocks. So I wanted to find, again, a position within one of the financial components of the XLF that appeared to have some sell side activity but not too extreme. And again, I'm setting up in this case for a bearish position. So if you've seen many of these different sectors, again, the retail sector down 11%, the transports down about 8%, the XLE, which is your energy sector, down 6-7%, the emerging markets down 10%, and all of a sudden, again, I come over to the financials, they're only down like 3%. I'm like, well, there could be some kind of, again, negative activity coming inside of these financials. And if there is, I want to be there for it. So I had to dig in here and try to find a financial that hasn't seen, okay, an onslaught of selling recently. Bank of America was the first one I brought up. I'm like, all right. So I placed a trade just a few weeks ago in Bank of America. But you have to realize, Bank of America, I mean, this thing's off over 10%. So immediately I go, next! What do we look at? So I go to what? Citi. All right, so I dig into Citi over here. And again, I'm just running through a list of financials that I know comprise the XLF. It's Citi, it's B of A, right? JP Morgan in here. It's the usual suspects. Then I took a look at Citi. Citi, just from recent highs, this thing's off like 11%. Yeah, that's just not going to do it. And I want to show you this. Here's a day where the S&Ps not only are up big, they're up huge, right? The S&Ps are up 20 points today. What's Citi doing? Nothing. I mean, it's literally unchanged in the day. Then I cruised over to JP Morgan. Okay, JP Morgan over here. What has it done? What have you done for me lately? And the answer is not very much. Although JP Morgan did catch my attention. It's only down about 5%. I looked at Morgan Stanley. Okay, I looked at Goldman Sachs, and I finally found a candidate. That's Wells Fargo, because Wells Fargo moved much more in line, okay, with what the broader market and the XLF did. So the decline in inside of Wells, not as substantial. It's just about a 4.5% kind of decline inside of Wells Fargo. And as such, I said, well, you know, again, versus the other major, okay, sectors which have had more substantial sell-offs, okay, Wells Fargo, again, has not sold off nearly as much as not only most of the rest of the financial sector, but Wells Fargo hasn't felt the brunt of selling like, well, things like emerging markets and transports, right? And there could be a little bit of catch up to the downside here. So this is, again, a bearish position that we happen to be looking at inside of Wells Fargo. Close up the left side bar. Prime, again, prime day to discuss this. The S&Ps are up 20. What are you getting inside of Wells Fargo? Absolutely nothing. It's not participating to the upside. It's showing weakness over here. Again, the trade that we're looking at right now happens to be the 49.5, 47.5 put spread 39 days out. And you can see, you know, the volume, the contract size that's actually trading in and around this spread. Why? As I put the spread on today. Okay. A couple of people possibly, you know, followed some of the trade ideas over here, but this spread, it's 49.5, 47.5, okay, put spread out there in Wells Fargo, and I'm looking to buy it for about a 95-cent debit. I purchased it earlier today for in the neighborhood of 90 cents to 91 cents. I actually executed a number of different contracts at various prices. I like to fire one at a time for best execution on a trade like this. Now I'm risking 94 cents to be able to make what? I try to make between 55 and 65% on a trade like this. So if you go out there and you risk your, you know, 90, 95 cents, you're going to be closing the spread when it's worth in the neighborhood of about anywhere from about $1.45 to about $1.50. Okay, and you've got 39 days to be right, 39 days to be wrong, but it is a bearish spread. Obviously, we'll need Wells Fargo about 39 days from now, just over a month from now, below 47.5. Hope everybody can tune in. It is going to be this coming Wednesday. It's Wednesday evening at 7 p.m. Central Time. We are doing our covered calls course. Those of you interested in kind of generating income off of existing stock positions, or if you're looking for good stock candidates, a big portion of this this coming Wednesday's class is going to be finding the right covered call candidates. Okay, and I'm not going to omit the possibility of even getting short some stocks out there, so just be aware of that. I'm also going to be discussing synthetic covered calls. That is for those of you that do not want to own the stock. A little bit of discussion there on stock replacement strategies. Again, that is right here at TheoTrade in the TheoTrade chat room, 7 p.m. and it is May 18th. That's Wednesday, May 18th. Class should run anywhere from 2 to 2.5 hours. I want to thank everybody for joining us here at TheoTrade. Stay tuned for much more. Have a great evening. Bye-bye.